Welcome back to the Dividend Diplomats YouTube channel. You've got your boy B over there, and you know you're rolling with Lanny, the Dividend Diplomats, and we are back in the saddle because we finally are coming out with a nice video going over dividend stock purchases, right, B?
That's absolutely right. It has been a while. It's probably been a month or so since we pushed one of these out. But before we start talking about the stocks we bought this last week, please smash that subscribe button. If you haven't already, subscribe to our channel. Thank you very much for following us over the last couple of years. It's been a pleasure. We've enjoyed growing our YouTube channel, and on top of it, bringing all of you dividend news and helping you reach financial freedom.
That's what it's all about. Dividend investing, I think, and Bert thinks, the DD thinks, is the best form to create passive income in the form of dividend income. This week has been a little wild during the week of January 17th. First, Bert, what did the S&P 500 do, and what did they break below this week?
It tumbled on down. The S&P 500 was down 5.6% in this short trading week. So even though they lost a day, that didn't stop the market from coming on down.
Keep it dropping, baby.
It started the week over 4650 and it ended the week below 4400. Yes, I know. Normally, some people are looking at this like, oh no, our values are falling. We are looking at this as, oh heck yeah, let's get off the sidelines and buy some undervalued dividend stocks that are trading at a discount.
All that means is that you can buy more income with less money, baby. That's what it's all about in the dividend investing game. Turned on the noise from the market fluctuations and keep buying that passive income stream. But not only did the S&P 500 make big news, but the cryptocurrency market has made big headwinds because Bitcoin dropped below $35,000, and then Ethereum dropped below 2,500 at a few points, and is even actually right now at or a little bit below 2,500. So you're talking sheer drops in the cryptocurrency market right now.
Yeah, it's fallen everywhere. So it's not just the S&P 500. It's not just equities. It's not just tech stocks. It's even reaching the cryptocurrencies as well. So it's been an interesting start to 2022, and a bunch of buying opportunities continue to present themselves elsewhere. So Lanny, while we're going through this here, before we start talking about our purchases, let's just quickly roll through what are some of the major headwinds that are causing the market to decrease. I mean, one of them obviously here, the Fed continues to talk about raising interest rates and tapering its bond buying programs there. So how it could have not one, not two, some people are saying 3 hikes, some say 4 hikes, some are even saying up to 8 interest rate hikes during the year here. It's absolute insanity, causing some uncertainty here in the market.
You know, I anticipate 1 interest rate hike possibly for sure before June 30th, maybe 2. You know, the year may end up in the range of 2 to 4 interest rate hikes before the end of the year. And I think 7 to 8 is a little bullish. I know a few big bank presidents have been dropping some of those statements, but we're also dealing with inflation, as well as Omicron still from COVID-19. And hey, maybe the DD producing at least 3 videos a week is causing the market to drop, or the fact that we're still not over 12,000 subscribers. So guys, subscribe to the channel and give the video a thumbs up as we try to reach the millions and millions of dividend investors out there, guys, because that could be causing the market to drop.
That would be awesome if it was. But again, we're trying to take advantage of as many of these falls as possible by buying some of those stocks. And that is the name of the game. And that is what we are talking to all of you about today. We are going to discuss the purchases we made during this short trading week. And let's recap here too, especially since it's been a little bit of time since we've done this. So just to brief the viewers, the new viewers, especially on this, Laney and I have a consistent investment strategy where I buy a certain stock every Monday with my wife, and Lanny buys a certain ETF and other equity position with that every day. So that's going to be, obviously, we talked through that. We're going to jump right into those consistent purchases because it's been so great knowing that every week you're putting a certain dollar amount in the market. My wife and I each grab 1 share of Johnson & Johnson each. So that's what we kicked the week off with, right at 9:30 a.m. when the market opened, the order triggered, and boom, we picked up 1 share each at 167.10. That added $4.24 to our dividend income each, or $8.48 total. And the yield on that purchase was 2.54%.
J&J, the GOAT, one of the top 5 foundation stocks for your portfolio. I mean, Bert, love it. Love J&J. I know why you buy them. One of the best dividend kings out there in the stock market. And you've been doing this for how long now?
Almost a year. We're coming up here on a year. I think we started in March or April of 2021. So the positions are getting large and we love it. It's a company that's consistently trading undervalued to the market with PE ratios typically between 16 and 18. Fantastic payout ratio. And like you said, they're a dividend king and they have some very strong consumer brands as well. So that was our weekly purchase. Lanny, why don't you talk to us about your weekly purchases?
Sure, for sure. So, you guys probably know, but for those that don't, I'm a big believer in Vanguard ETFs. If you're a beginner investor or any sort of investor, buying Vanguard ETFs keeps it simple, keeps it consistent. My wife and I are no different. No matter what, we buy weekly Vanguard's high dividend yield ETF. We buy at least 2 shares each. We like VYM because it has a really good balance between dividend yield and dividend growth. So Tuesday on January 8th, each bought the 2 shares of VYM at $113.88 for my account. But my wife beat me on share price. She got at her 2 shares was $113.45. But we weren't done there because even during that same day on Tuesday, it dropped almost a little over $1 from that price. So I actually picked up another share for my account at $112.87 and another share for her account at $112.84. Again, she beat me twice in one day on the stock price of VYM. We dropped $453 in total capital, added $18.60 in forward dividend income with that stock or ETF purchase at a yield of about 2.75%.
I'm fist pumping because I know how much it's got to drive you insane that she beat you twice. But hey, it's all good.
I'll get it back next one.
Yeah, but what's nice about VYM is if you peel back and you look at some of their top 10 holdings, it very much resembles our stock portfolio here, what we'd buy individually. So if you don't want to buy individual stocks, VYM is a great place to look if you're trying to own a lot of dividend growth stocks in there. And also they have a very low expense ratio too, which is always a nice feature there for a Vanguard ETF. But wait, Lanny, that wasn't your only weekly purchase now, was it?
You're right. So everybody in the investing community, obviously it's all about putting every dollar to work as much as you can and to keep adding passive income to the road or on the road to financial freedom. Again, this one I kind of introduced a few months ago. I've been buying a REIT, a dividend REIT. Really it's Warren Buffett and I kind of going back and forth through various text messages. Bert's in on the convo. Typically it's about your wrestling, your favorite WWE legend, whether it's Stone Cold, Hulk Hogan, The Taker, Triple H, Shawn.
Didn't he say he's a Blue Meanie fan?
He could represent the Blue Meanie pretty well. But, Warren and I, we both own Store Capital, ticker symbol STOR. He has a few more dollars invested than I do. But I've been buying Store weekly. It's a dividend REIT. Again, you get a little bit more yield because REITs are required to pay 90% of their reported earnings back to you, the shareholder. So on Monday or Tuesday, again, January 18th, I bought 2 shares at $33.30. But again, it dropped later on in the week, about 1 more share at $31.66 on Thursday. Between the total capital right there, it's about, again, $98 and some change. We added, approximately $4.62 in forward income based on that purchase, about 4.6, 4.7% overall yield. And actually right now, Store Capital is below $31 per share. So the yield is now over 5% on this REIT.
It's kind of crazy how much the price for this company fell in 1 week alone, to where your first purchase is at 4.62%, and you are most likely going to pick it up again just 4 trading days later at a yield over 5%.
Turn off the noise and keep investing, baby.
Yeah. All right. Well, that concludes Lanny's weekly purchases. We saw our Johnson Johnson. My wife and I, we put a lot of money, but we only put it into one stock here. It's a position we have been building over the last few months in my wife's portfolio. It's a consumer staple stock. And if you follow this channel and you listen, you know I love consumer staple stocks that you can find within your household, Lanny's household, your neighbor's household, everybody's household. Big brands, and this company's brands deliver. That company is Unilever, ticker symbol UL. I mean, what you got, Highlands, Mayo. That's always the number one right there.
Bert loves that mayo, baby.
Every day I mix it with the Dove, the Suave, the Axe, all of that. It's a great deodorant there. You just sprinkle in some mayo, it does some wonders. But in all seriousness, those are just a few of the big brands the company has. Their stock price has tumbled, man. Let me tell you, talk about a tough week for the market. This is a tough week for Unilever. They are down 8% over the last 5 days. And year to date, Unilever is down 8.79% as well. You want to take it back a little further? Let's go one more. They are down 19% over the last year. So yeah, of course, we're going to keep buying and lowering our cost basis in the position. So the purchase, what was it? On the 20th, added 5 shares at $49.94 with a dividend yield of about 4.12%, because it's always hard to peg that actual dividend. So we just picked up 4.12 on it. I added $10.28 to our forward income. The next day, we grabbed 3 more shares at $49.89, added $6.17. So in total, my wife added 8 shares and over, drum roll please, $16.45. But we weren't done there, Lanny, were we? No.
Hey, there's more.
There's more here, because I also had some money sitting in my Roth IRA. I had some non-reinvested dividend cash sitting in there, along with contributing at least $500 for last year. So I just took the flat amount and said, buy me as much Unilever as I could. So we picked up 10.301 shares of Unilever for $513.70, adding $21.18 to my dividend income right there. So in total, 18.301 shares and over $37 of dividend income alone from Unilever.
You added $37 from Unilever in income. You invested about $913. Yield was over 4% here on your investment.
That's absolutely right. And we're going to continue adding, especially as long as Unilever's below $50. I love this company, and I'm very pumped up to continue adding to that position. So that kind of, after you.
I was going to say, and Unilever stock really took a tumble because the deal that they walked away from with GlaxoSmithKline, again, it's really hot in the industry to kind of either spin off or do other joint ventures. And, that sent the stock price tumbling this week.
It tumbled so much that, in fact, I wasn't the only person in this video to pick up some Unilever, was I, Lanny?
You weren't, Bert. You better believe I picked up 1 share from our wife's dividend stock account because she holds it in hers. We did actually get it below $49 per share. We got it at $48.83. 1 share at a yield of 4.21%.
That's insane.
$6.
Absolutely insane. Nice job grabbing it below 49. I missed it on that one day, but I wasn't missing it the second time below 50. That's for sure.
Hey, you got to stay ready before you get ready, baby. That's what it's all about.
All right, so round this video out, Lanny. There's 1 more purchase left here. Let's round third. Let's bring this sucker home.
All right, so if you didn't pay attention to the video from last week where we did a deep dive analysis on Rowe Price, ticker symbol TROW, one of the biggest asset management firms in the industry. I've owned them for a very long time in my dividend stock portfolio account, and so is Bert. Bert has over $13,000 worth. I have somewhere $14,000 worth of Rowe Price. Link below is in the description. You can see our dividend stock portfolios because we're fully transparent out there to help you, the investor, to see what we're buying and holding. All right there in the link. But on the video, during the video, they were trading at $175 per share, down $50 from their 52-week high. Again, based on the analysis, I said, okay, I'd feel more comfortable buying if it hit at or below $160 per share. So all the commenters out there, you got your wish, your dreams come true. Yes, I bought one share at $159.96. I'm adding $4.32 in dividend income at a yield of 2.7%. Bert's shaking his head because this is still almost $90 to $100 higher than when we initially bought them for both of our portfolios.
I'm also shaking my head, not just because of that, but because I never would have thought that within just a few days of making that video, the stock price was going to fall $15 per share, and you were actually going to do it. It's incredible. So yeah, of course you're going to grab at least one share at that price, especially when it was showing signs of undervaluation at the time we made the video. So why not grab it when a few days later when it's even lower in price? Nice job.
You know what? If it drops into the low 150s, I'll be back at it again.
So I'm talking about, so here, let's summarize. My wife and I picked up Johnson & Johnson and Unilever. We put in $1,247.27 into the market, adding $46.11 to our forward income at a yield of 3.70 cents. Ooh, what about you, eh?
First, Bert, congrats. You dropped over $1,000 this past week into the stock market. I want everybody here. Let's run it back. Let's get Bert to run it back. Let's get another $1,000+ investment week for Bert. I didn't quite hit that threshold. So Bert, I'm going to have to try to catch up to you here. But, my wife and I, we invested $987.42 this past week of January 17/18th, added $29.60 in forward dividend income at a yield of a solid 3%.
That is fantastic. So it's incredible. I mean, right on the cusp of 1,000, another great strong week right there, adding nearly $30 of income. Fantastic stuff. And in combined, we both added between our families over $2,200 into the stock market. And drum roll, please, $75.70 of forward dividend income. Guys, that's what it is all about here. Taking that cash, putting it to work, and buying those income producing assets. Let's keep it going.
So guys, what did you end up buying this past week? Please leave it below in the comments. What stocks are you looking forward to when the market opens on January 24th? Definitely leave the feedback below. Guys, if you haven't already, definitely subscribe to the channel. Make sure you hit the notification bell so you don't miss a beat from your boys at the Dividend Diplomats. Bert, that was you. And this is Lanny from the Dividend Diplomats. Over and out.